Sawadee krap. Good afternoon, ladies and gentlemen, and a very warm welcome to Siam City Cement's SCCC Opportunity Day for Q3 2024. I'm pleased to introduce our senior executives who are here with us. Kun Ranjan, Group CEO and Group CFO. Kun Montri Nitikun, CEO Thailand Cement Business. Without further ado, I would now like to invite Kun Ranjan to kick off the presentation. Kun Ranjan.
Thank you, Kap. So let's look at the summary of our 9 months at class. But before that, Q3, we continue to see geopolitical events around the world. In the Middle East, the war continued. Russia-Ukraine continues and is getting intensified. We also saw recently the elections in US, eventually Trump winning with a thumping majority. And this will have certain positive and not so positive impacts to the global situation, particularly towards China and Southeast Asia, with his economic measures and policies to correct the perceived trade imbalance between US and China and Southeast Asia. Yet to be seen what comes, but it might have some impacts. Particularly, we saw the Southeast Asian currencies weakening after the election results were announced. In Q3, we also saw many countries where we have our business. We had change of governments, which is good, and we see more stability. Starting with Thailand, we had a new prime minister, a new government. Same was the case in Vietnam. A new prime minister was appointed. Similarly, in Sri Lanka, a new president and government from the same party was appointed. And in Bangladesh as well, there was a change of government and there is a new prime minister and government in place. So these are, in a way, positive signs from a political stability point of view in these countries. Overall business in Q3, Thailand, we continue to see lower than expected demand, which also led to a slight impact on the prices as it usually happens. But obviously, continued lower energy cost, lower FT cost helped us to have still a healthy performance. Vietnam volumes continued to pick up as we saw in the previous quarters compared to 2023. But of course, massive competitive action and activity which did not support the prices. In fact, prices went down from Q1 to Q3. Sri Lanka recovery very visible, and we saw both volumes and overall business picking up, but then there was a pressure on prices in Q3 compared to Q2. I would say overall, we continued to push our initiatives internally under our flagship project Fit Plus, to have a very strong handle on all input cost, variable and fixed. And this has been helping us to control the velocity of our cost in relation to the velocity of top line, which has unfortunately been lower than 2023. So given all what we saw, very happy to report that we have had a very solid financial performance so far in 2024. And as you can see, the group net profit increased 52% year on year, group EBITDA 28%, and each of the countries, the profitability is higher, although little lower in Thailand because of the demand side and the volume side issues. But in Vietnam and Sri Lanka, they were coming from a low base in 23, so much higher, 2.5 to 3 times higher performance in the first 9 months. As we've been continuously saying, working to make our balance sheet more lighter and stronger, and you can see our net financial debt at end of September stood at 14.6 billion baht compared to 20.2 billion baht in the same period last year. Gearing down to 46% compared to 58%. We continue to generate higher free operating cash flows given our focus on net working capital and also higher EBITDA. So it stood almost at 6. In the first 9 months, we generated free operating cash flow of 6 billion baht compared to 2.4 same time last year. We also have resumed the interim dividends, which was paid in Q3 at 4 baht, and we will continue with this policy going forward. Our focus on operational excellence and innovation, we've been sharing this for some time, and it has really worked very positively for us as we've been getting higher operational efficiencies and productivity through our Project Fit Plus, which now runs in-house by our own teams across all parts of our business in all countries, leading to lower variable and fixed costs across all companies. As I mentioned earlier, the net working capital focus continues. Year-on-year comparison, we have had lower inventories, better control on AR and accounts payable at the same time to make sure we are at a very low benchmark on net working capital to net sales. Our focus on providing superior and innovative products and solutions to our customers continues, and we continue to launch very segment and low CO2 products in the market. We launched this year INSI Patch CPM and INSI Eco Plus in the Thai market. Similar initiatives exist in Sri Lanka and Vietnam as well. Update on sustainability. Clinker factor, for the first time, I think we reached at a group level 70.2%, 250 basis points lower than last year. TSR, which is thermal substitution rate, which is replacing coal with waste materials and other materials, up by 800 basis points from last year to 28.3%. The low carbon cement conversion rate reaching almost 89%, 780 basis points up from last year. And finally, our solar project with BGRIM under the new JV IBS is on track, 83 megawatts, quite a large project, and we look forward to have the fruits of this project in Q3 2025. Q3 and early Q4 were quite interesting activity on our side. You heard already in Q3 that Sunrise, our major shareholder, acquired all the shares of Jardins in August 2024, which led to, under the chain principle, Sunrise to make a mandatory tender offer to remaining SCCC shareholders, and at the same time, SCCC, who was a joint offerer, as SCCC was already holding 44.9%, 99% in Lanna, making a mandatory tender offer to Lanna and TAE's shareholders. The result was Lanna shareholders opting for the MTO, and the net result is now SCCC shareholding increasing to 61.44% as of October from 44.99%. Now, what does it mean for SCCC? The historical background is SCCC was always a major shareholder in Lanna at around 45%, and with a very simple objective that it allows us backward integration, securitization of coal, and as such, it was a financial investment, and it will continue to remain so. So we will continue to manage Lanna as in the past through the participation in the board, and through the board supervise Lanna management. We are in the process of financial consolidation of Lanna into SCCC in Q4, and including the impact of PPA analysis, and we will provide more information on the results of that in Q1 2025. So, like I said earlier, our revenue in the first 9 months is lower by 9% from same period in 2023. It's an impact coming from Thailand primarily, where we saw pressure on volumes coming from lower demand. We explained earlier, this is a unique year where the government budget in Thailand was approved in end April, May, and by the time the money was allocated for projects, we lost good part of the year. And even in Q3, with a lot of rains and floods, we saw the demand actually not picking up at all. Despite a lower top line, we have delivered a much higher EBITDA and EBITDA margin at 6.7 billion baht compared to 5.2 billion, and our EBITDA margin improves to 22.7%. Likewise, net income, even better performance because we had lower financial costs and also slightly lower depreciation. So overall, our net income stood at 2.8 billion, 9.5% compared to 5.7% last year. Like for like, if we take out certain one-off items, the net income is actually even better than 2.8 billion. And especially in Q3, against 790, it is about 886 million baht, in line with the previous quarter. Our focus on cash flow generation continues through Q3, and for the first 9 months, as you can see, we started with an opening cash balance of 6 billion, and the ending balance is 3 billion. We have had a significant amount of cash generation in the first 9 months, about 5.8 billion. But then, of course, we use that cash to, first of all, pay the dividends, both for 23 and also interim dividend, but also significantly reducing our debt from the debentures permanently of Thai baht 4.5 billion. Which leads to a strengthening of our balance sheet as the net financial debt comes down drastically at the end of September, and our gearing improves from 58% same time last year to 45.6%. In terms of secured credit facilities and liquidity, we are very much and quite comfortable as we had 9 billion baht secured credit lines and also massive unsecured credit lines at end of September. We'll review that going forward. As you can see on the right-hand side, bottom chart, 2025, we only have 2 billion baht long-term loans maturing, which would be paid back through our internal generated cash, and we don't need to restructure our long-term positions. Let's move to the financial performance by each countries, and I'll request Khun Mantri to explain about the situation in Thailand.
Thank you, Khun Ranchan, and good afternoon, everyone. So let me have a quick brief on Thai operation performance. So overall, the market demand in Thailand, this year we anticipate drop around 4%, and this is because of the first half that we lost, as the market demand, we lost around 10 to 11%. However, we can see there some good trend in Q3, even though we have the flood crisis, but we still improve around 1 to 2%. So this trend will continue in Q4. But all in all, still negative around 4%. That's what our anticipate. And thanks to the government budget this year, this is already approved, last month. So that will help the momentum for the big infrastructure projects start from Q4 this year onwards. However, when looking at the demand, so I would split into main categories. For the retail, this is still a struggle, in terms of the demand, mainly because of the low buying power, and this is mainly due to the high household debt. However, when looking at the professional segment, which is contribute more than 70%, of the demand, so this is we able to rely on the big infrastructure project, from the new budget from the government, and we can see the good trend as well for the industrial segment. However, looking at the residential segment, still in the very low performance. This is mainly because of very high inventory still, available in the market. So this can be the limitation for the developer, to launch new projects next year. When looking at the revenue, you will see that revenue year on year decline around 13%. And even though that we drop in terms of revenue, mainly because of the volume and price, but when looking at the EBITDA, the profitability, the margin improved from 19.3% last year. And this year, for the first 9 months, we achieved 24.9%. And thanks to the lower production cost and our initiative from the Fit Plus, as Kun Ranjan mentioned, we have launched the new low carbon cement product. Also, this one, we able to improve our profitability. And when looking at only Q3 performance, slightly drop compared to last year. This is mainly because of the timing of the annual kiln shutdown. And the another reason because of we have lower performance of the Conwood Thailand and Conwood Indonesia performance. So that would be the overall, for the Thai operation performance. Thank you.
Thank you, Kap Kumantri. South Vietnam market. The volumes picked up quite significantly from a very low base in 2023. Still not reached the 2022 or pre-COVID 29 levels, but there is a momentum, particularly in the infrastructure segment, driven by government initiatives to push the economy. So overall, the revenue improved primarily on volumes, as prices have actually come down from, like I mentioned, from last year and quarter on quarter. So 9% increase in the revenue. However, if you see on the right-hand side, the profitability much higher compared to 2023. Also, the EBITDA margin reaching to closer to our targets of keeping it in the mid-20s% levels. Sri Lanka, we see a positive momentum in terms of demand increasing in the country, as the previous and the new government continue to perform on the IMF agreed initiatives on various fiscal and tax matters. Overall, the country moving in the right direction, as we see, and this is leading to improvement in the construction sector. As you can see, a 7% improvement in the revenue coming from primarily volumes again, as prices have been a little lower than last year. However, given the low energy costs and the Fit Plus project, we delivered a much healthier EBITDA and EBITDA margin. Bangladesh has gone through its own political instability in the earlier quarters, leading to a very sudden removal of the very long-term serving Prime Minister, and as well as flooding in some parts of Bangladesh where we have a solid position. So this all led to a lower revenue in the first 9 months compared to last year. Also a drop in profitability and EBITDA margin. We believe that with the new government in place, we should slowly recover in Bangladesh in 2025. Cambodia, despite lower investments from China, I think the Cambodian government continues to drive the economy through infrastructure and exports, and due to the local demand remaining good, we have delivered almost same top line as last year, but a slight improvement in the EBITDA and the EBITDA margin due to overall lower costs. Let's move to the next segment on ESG initiatives, and I request Khun Mantri to take us through.
Thank you, Khun. So our group CO2 emission are very proud to present that we achieved very good performance. You will see that the first 9 months of this year we achieved at 566 kilogram per ton of cementitious. So this is 6% down from last year, and our target for 2030 we aim for 470 kilogram per ton of cementitious. This is thanks to the higher TSR and also lower clinker factor. So I will explain in the next slide. Next slide, please. When you're looking at the thermal substitution rate or TSR, this is pretty clear that this is we able to improve 33% for the first 9 months of this year. So we achieved 28.3%. And if you compare to the baseline in 2020, so this is big jump, from 11.1% now 28.3%. And our target by 2030, we like to achieve at 40%. And when looking at the clinker factor, this is also the similar trend. We improve a lot. Looking at the first 9 months of this year, we already achieved 70.2%. This is 3% drop from last year. Last year was 72.6%. And when looking at the target by 2030, we like to achieve the clinker factor at 65%. And right top, you see that our group conversion rate, this is changed from the OPC product, which is very high clinker factor and high CO2. So now we move toward to the hydraulic cement or the low carbon cement product. So you will see as a group, we able to convert almost now almost up to 90%. So that the big improvement. And clearly because of the key contributor from Thailand, because of only Thailand now, we're still using OPC, whereas the another country, they already convert to the hydraulic cement or low carbon cement product. But even that, looking at Thailand alone, we already achieved 80%, and this is big improvement from last year was only 65%. So that also the big improvement. Next, please. And here, some key highlight. We just have recently our new product launch. So we're not just only looking at the OPC1 product. We're looking at the OPC3, this is application for the higher strength, especially on the CPM segment. So now we have launched new eco-friendly product, called Insidam higher strength. So this is also we have the good collaboration with our big customer, right, Priksa, to use this product. And this will be the new era, for the low carbon cement from next year onward. And similar to Bangladesh, we have launched your INSI Eco Plus. This is more on durability cement product. So this is more on the sulfate and chloride resistant, and this is work well, after we launch this product. Next, please. And to accelerate our decarbonization through the strategic partnership, just now Kun Ranjan mentioned about IBS, in CB Cream Solar. So this is 83 megawatt solar farm. So this is renewable energy, and we expect to reduce the carbon footprint around 54,000 tons per year. So this is our good project, and we expect to have the COD, start the COD by September next year, and also that will generate our new revenue, new EBITDA, as well as lower CO2. And some key collaboration with our partner like Priksa and also DRT. So we brought them, to visit our site and to understand the cement production process. This is to motivate and encourage them to use more our low carbon cement. And we just signed the MOU with Amata Corporation. So this is to cooperate in terms of reducing CO2 emission in the industrial segment, especially in the Eastern Seaboard. Next, please. We as well do on the CSR. You may know already about our flood crisis, in the North and Northeast region. So our team as well, do the post-flood recovery, at these two regions and support both the people and our customer. Bangladesh, they have some CSR activity, mangrove restoration in Bangladesh. Vietnam, they do similar activities like Thailand. They brought the customer, and this is to encourage the customer to understand the cement production and also to use more low carbon cement products. Last but not least, next slide. I think for the past 3 or 6 months, we got many awards, from the government body. So this is to celebrate our ESG achievement and recognitions. Just a few highlights, on the Saraburi operation. Our factory just got award, level 5 Green Industry Award, for the 5th consecutive times. This is we are very proud of that. In EcoCycle Thailand as well, we just got the Sustainability Award 2024 from the Thailand Supply Chain Network, and also our EcoCycle and also Saraburi operation, we just got award, from the Ministry of Industrial, for Eco Factory for Waste Processor. That's some key highlight, for our ESG. Thank you, Ranjan.
Thank you, Khun Montri.
Thank you, Khun Montri and Khun Ranjan, for the very insightful presentation. Now we move on to the outlook.
Outlook, yeah. So very quickly, we will continuously keep a close watch on both geopolitical and country-by-country events as they progress, and look for opportunities and mitigating the risks, if any. Overall, we remain cautiously optimistic based upon what we see the situation around us. Thailand, like Khun Montri said, from Q3, despite floods, we see an uptake of the demand as government projects are expected to continue to come online and leading to an increased demand of construction materials. We continue to see very high household debt together with central bank policies, which reduced liquidity overall, the loans to individual consumers as well as to SMEs. So the housing side will continue to be slow, but then we are very optimistic on the large projects driven by the government projects. Vietnam, more or less the same. South Vietnam, we did see government-led investment projects coming in the south, slightly lower than North Vietnam, but then still some projects have started and continued new projects are continued to be launched, and this will help the construction sector and demand for building materials to go up in 2025. Though we see a huge gap in demand and supply, which means the pressure on prices will remain. Sri Lanka, a good story so far. The government's efforts with IMF on debt restructuring has been completed. There's a grace period till 28, and now the government has a hard challenge to ensure that the repayment happens by that time. Bangladesh, political stability after the appointment of the new Prime Minister is getting better. However, the country is suffering from a very low liquidity, particularly for the US dollars, high inflation, high interest rates, and the infrastructure segment is practically dead, as the new government is setting up its own processes and government officers in the villages and smaller cities in the country. Cambodia, while China's economic slowdown directly affects Cambodia's overall FDI and the projects which we saw 3-4 years ago, but the government's own industrial construction and government-led infrastructure projects will support and drive cement consumption. So that's all from us on the market outlook for 2024 Q4.
Thank you, Khun Ranjan. We have now come to the end of our presentation, and we'll now move on to the Q&A session. We have received a number of questions from the public, and I would like to address them now. The first question is, if the demand in Thailand gradually declines, does the company have plans to cope with it other than the Fit Plus project? And do you have to reduce the production capacity?
We don't plan to reduce production capacity any further. We have done that previously in the last 3 years or 4 years already. I think the demand going forward will be either stagnant or move up, 1.5%, and we have sufficient capacity in operation for that. And we will try to get a larger portion of the demand which is coming through our superior products and solutions and services. Yeah.
Moving on to the next question. If Sri Lanka and the Bangladesh markets take some time to recover, which aspects does SCCC is concerned with, and what is the plan for SCC to cope with it?
Sri Lanka, we see lesser uncertainty now, given the elections have happened and their IMF reform program is on track. So we see less challenge or risk going forward. We'll keep a very close watch on the events that will impact Sri Lanka, either external or internal. Bangladesh is a large population, a lot needs to be built, so we are quite optimistic in terms of demand, which will eventually come. It's a transient phase they are going through, similar to what Sri Lanka went through the last 2 years. Not that extreme, but something similar. We are quite hopeful that in the next 4 to 6 quarters, Bangladesh would be back on track.
The next question. Is there any new low carbon product plan to launch in Thailand?
Yes, like Khun Mantri mentioned, we have been continuously launching new products, and you saw compared to other countries in Thailand, we are still at a lower level, and our target is to have 100%, moving to low CO2 products in the next 4 to 6 quarters, and we definitely intend to do that.
Thank you. Moving on to the next question. Can you please elaborate on the coal price outlook for Q4 2024 compared year-on-year or Q-on-Q?
Yeah. Coal prices in the first 3 quarters have been range-bound and lower than in the previous quarters compared to 2023. We do not see a major spike as we saw in 2022 when coal prices, went 2-3 times higher for different reasons. So we see the trend in 2024 remaining the same as in the previous quarter, and coal prices will remain range-bound.
Thank you. Next question. Do you have any concerns about Trump's presidency and the impact this might have on the overseas market?
Like I mentioned in the beginning of our session today, Trump's winning will have impacts. A bit early to say, but definitely what we saw in his previous term, his stance on China and now Southeast Asia, increasing the tariffs and other economic sanctions to balance the overall global trades. That's how Trump had done in his previous presidency, and he will definitely do something. Let's wait and watch. This will impact the exports from Southeast Asia. This will also put pressure on China to export and do more trade within Southeast Asia, and they have the cost advantage. So this is one thing which will impact Southeast Asia. The second is on the currencies. Like I said earlier, it depends upon, again, Trump's, if he wants to keep dollar strong or weak, it has a direct impact on China, Japanese yen, and Southeast Asian currencies.
Thank you. The next question is on Lanna, and the question is, what is the positive or negative impact from the consolidation of Lanna into SCCC?
Lanna's consolidation to SCCC will definitely have a positive impact. While there are not many synergies per se in the two operations of two companies, but in terms of financial consolidation, we will see a much better eventual financial ratios on debt equity, on liquidity, etc. Because Lanna has, as the coal prices are still, I would say, 10-year high, Lanna has a significant top line. The costs are not going up in that proportion to the increase in the coal indices, leading to much healthier EBITDA and cash generation and net income as well. So we believe that if the coal prices remain as they are, Lanna's financial consolidation will help even further strengthening of our balance sheet.
Next question. Do you have any kiln shutdown planned for in Q4 2024?
No.
The next one's about interim dividend. And the question is, will the interim dividend continue next year?
Yes, as I mentioned in my presentation, we revisited our policy earlier this year, and we started interim dividend, and we happy to inform that we would continue with the same policy in the coming years.
Let's take one final question. Can you please give some guidance for next year regarding revenue and important business plans?
We are in the midst of preparing our budget for 2025. It's a very careful and yet detailed exercise, country by country, how we see the volumes, the economic growth, the construction sector activity in each of the countries. We are not ready with that numbers, and we cannot tell you exactly what will happen, but broadly, it does not appear to be a year where we can say our top line will grow, in double digits and things like that. So we are very closely watching. We do see demands coming back, but at the same time, the competitive activity is also heightening, putting a lot of pressure on the margins. And depending upon how energy costs play next year, especially in Thailand, we had no FT increase this year compared to 23. If the FT and also coal prices, diesel prices depend upon the wars as well. So there are a lot of geopolitical impacts that can impact our cost lines very quickly, and we have a very less control on that. So yet to be seen how it will pan out. But in terms of demand alone, we are slightly optimistic, but it's not going to be a double-digit growth kind of a thing, as the GDP growth in most of the countries is also limited.
Thank you. Oh, we have one more question here, which has been submitted. The question is, will the SG&A expenses reduce further going forward?
Definitely. So this is something which has been our focus for 6 quarters now, and we have done benchmarking with our kind of companies in Thailand, in Southeast Asia, also with other countries in more advanced countries. So we will bring down our SG&A as a percentage to net sales in 2025, and continue to do so, 0.5%, 0.3% year on year. That's something which we are quite proud of, as I've been saying earlier, to deliver more with less, and then in 25 you will see also a reduction of SG&A.
We've now exhausted all the questions that have been submitted, but since we have a few more minutes left, let's wait for a minute more to see whether there are any more questions that will be submitted.
Happy to take.
We have 2 minutes. I guess if no questions, we can wrap things up and call it a day.
Yep.
Well, thank you very much, ladies and gentlemen, for joining our session today, and we look forward to engaging with you again in the next quarter. Thank you.
Thank you.
Thank you.
สวัสดีครับ